You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's cooking in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, is Mark Longo from theoptionsinsider.com, as well as from the network that broke Spotify this past week. Yes, we did. So much content. They couldn't handle us out there. Listen, it is fixed. The upside is that you can get them again over there. The downside is that you can only get half of our 6,000 roughly episodes on Spotify now. If you want the full kit and caboodle, head on over to the website or indeed to our mobile app. You can get all 6,000 plus episodes there. 17 and a half years worth of content for you, the listeners. While you're at the site, you can also find theoptionsinsider.com/pro. If you go there, you'll find access to additional content, including our great pro Q&A sessions. We touch on futures options quite a bit on those, as well as, of course, options oddities every week. Coming at you earlier than usual tomorrow because I will be traveling later in the day tomorrow. So all sorts of fun happening this week. Giveaways, we're coming up to the end of the month, so pretty soon it'll be time to give away the June Pro Trading Crate. My goodness. So a lot of good stuff. Of course, live streams, early access to a lot of content. You got Options Bootcamp early up there from this week from our doubleheader. Also getting all of our OIC stuff before everybody else and a whole bunch more. TheOptionsInsider.com/pro is the place to go to learn more as we learn who is joining us in the CME Group Hot Seat today. We have a newcomer joining us. He is Brett Friedman, a managing partner at Winhall Risk Analytics. He also moonlights over there on the OptionsMetrics blog as well. Brett, welcome to the TWIFO program.
Thank you for having me.
And Brett, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of all things futures options, as well as what it is you folks do at Winhall Risk Analytics.
Sure. I guess in most broad terms, people can call me a commodity guy. Although I started in foreign exchange options, I was a market maker in FX options for several years. From there, I moved into energy. I was a market maker in crude oil options as well as products. And I'm one of the few people, I think, that can say that I was actually a market maker in the early days of power options, which if you've never traded power options, they're possibly the most volatile thing I've ever traded in my life. They make meme stocks look dead in the water. From there, I moved into consulting, and I sold my firm. I became the chief risk officer for Osprey Management, which at the time was the largest hedge fund in the world, largest commodity hedge fund in the world, that is. From there, I restarted my consulting firm, Winhall Risk Analytics. We are a risk management advisory firm. We advise mostly trading operations on metrics, on which metrics they should be using, how to construct their portfolio, where their risks are coming from, things like that. We also do model valuation. Lately, about 25% of my time is spent writing. I write weekly monthly for OptionsMetrics, as well as I write weekly for their sister company, OptionsStrat, mostly about whatever I think is most pertinent to what's going on. So thanks for having me.
Power markets. Yeah, I never dipped my toes into those, but I have heard stories about how wild those days were out there. So fascinating stuff. A lot of fascinating stuff to get to on the show this week as well, listeners. Let's kick it off with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down all the action, lighting it up to the light side and to the dark side over there at CME Group this week. Looking at the full report, which you can see if you follow us on Twitter at Options. Also, if you follow the folks over there at CME, you can see it usually heading out right before showtime. It's pretty red on the screen this week, listeners. I would say 70-30, maybe 75-25 red over green this week. So we're heading into, I guess, that summer malaise out there across the board. Percentage movers wise, it does seem like we are pretty much equidistant, the light side top mover and the dark side top mover this week. But Brett, as our guest this week, sir, you get pride of place. Where should we begin our journey this week? To the light side or to the dark side?
Let's go to the dark side.
All right. A red Saber fan. I like it.
I must admit, light side, dark side is a very equity sort of bias. Because like when crude oil goes down, that's not necessarily bad. I have no, people say that when equity goes up, it's good, and when equity goes down, it's bad. Commodities, I don't really care. I'm agnostic as to which way it goes up or down.
Actually, it's more of a Star Wars bias, but don't tell the folks at Lucasfilm. It's just all right, to the dark side, to the red saber as we go, listeners. Let's go. Number 5, we're kicking it off in the ags, off 3.6%. It was number 4 in the same direction last week, off 5.92%. So a rough couple of weeks for oats. You know the deal already. Oats doesn't put up a lot of paper, so probably not going to hang out there this week. Number 4, to the world of energy. It's one of our frequent offenders. It is natgas, off 3.74%. It was number 5 in the same direction last week, off 5.88%. So probably going to be hanging our head out there. Natgas tends to be explosive, pun intended, out there these days. This week and last week, it has been to the dark side. Number 3, back to the ags. It is corn, off 4.38%. Now we head off to the world of crypto. Number 2, Bitcoin, also taking a hiatus this week, off 4.84%. Of course, if you want more info on all that, check out the Crypto Rundown. Hits the network every Monday. Of course, you can hear it on demand whenever you're listening to this. And then number 1 to the dark side this week, we're back to the metals, listeners. It is silver, off 5.48%. It was number 1 the other direction last week, up 7.03%. So getting it all back last week and then giving it back again this week out there in silver. Our old friend Uncle Mike, probably not too happy as a result. Now to the light side we go, listeners, kicking things off again in the ags, this time in the livestock. It is live cattle, up 2.26%. Number 4, it is platinum, up 2.32%. So off to the metals we go again. It was number 2 in the same direction last week, up 4.22%. Number 3, it is RBOB, up 2.37%. Number 4 in the same direction last week, up 3.07%. So we've already been in the ags, we went to the metals and to the energy. Now we're going off to the realm of international equity indexes. It's the Nikkei, the yen-denominated Nikkei, up 2.48%. And the number 1 light side mover back to the ags, this time to the dairy listeners, up 4.35%. That was number 3 in the other direction last week, off 5.93%. So a very topsy-turvy week out there. It's almost every complex is represented. Looks like, with the exception of FX, but you know what? If you throw the yen-denominated Nikkei in there, it kind of plays on the FX front as well. Let's go out to the CVOL listeners for this week. Remember, you can play along with this one for yourselves. Just type CME and CVOL into your browser of choice. Then you'll get this dashboard. Go into the 1-week range. Go into the ordered list, and bam. You too can play along. If you did that, listeners, you'd see at the top of our list, speaking of FX, it is the FX CVOL this week, listeners, at a 7.67, up 1/4 of a point today. That's a huge move for FX vol. That's kind of interesting. Also pinning the needle for the week on its weekly range. The low came 7.25. The high right now, 7.67. So the game apparently afoot out there in the realm of FX. Below it, we have the Treasury price volatility. Remember, Treasury comes in 2 flavors on the CVOL front. Price vol, which is the way most of you people tend to think about it. And then, of course, yield vol, which is a very different beast. Price vol right now, 6.37, off about 0.04 today. On the week, also hanging out at its low end for the week. The high was 6.49. And then below that, we have the Ag Products CVOL at a 24.16, off 0.11 today. On the week, also hanging out pretty much every other asset we're going to talk about, with the exception of FX this week, listeners. All of them are at their lows for the week right now, which is kind of interesting. So vol obviously coming in, quiet holiday week, heading into, of course, a truncated holiday week next week. Folks taking some vol off the table. We have Ag Products 24.16, off 0.11. And again, the high for the week came 24.68 earlier this week. Below that, we have the commodities, the aggregate commodities CVOL at a 31.24, off about 1/4 of a point this week. And again, hanging out at the low for the week right now. The high, 32.61. Now to the realm of metals we go. Metals 16.36, off about 1/3 of a point today. So metals vol coming in aggressively today. The high for the week came at 18.56. And then below that, we have energy, the aggregate energy CVOL, 44.52, off a little over 1/3 of a point, 0.37 today. And again, at the low for the week, the high was 46.14. So not an explosive, pun intended, week on the vol front for the energy CVOL, with the exception of some coming off today. And then once again, leading our list to the dark side is the Treasury yield volatility CVOL, 113.12, off about 3/4 of a point just today. On the week, the high was 114.95, the low right now, 113.12. We've obviously seen Treasury yield vol move quite a bit more during Fed week, inflation week, things like that. So pretty much all in all, a relatively quiet week if we are seeing a lot of vol pretty much coming off the board heading into next week's truncated holiday session. But you know what, listeners? It's time to kick off the TWIFO party and head right on into a little bit of energy.
It's time to tap into the deep options well of black gold, Texas tea, natgas, and more. It's time to talk energy.
All right, listeners, welcome to the wild world of energy. You folks know where to go if you want to play along with this. CMEgroup.com/TWIFO. Once you're there, of course, head on into that drop down. We're going to kick things off in energy, so you're going to go down 3 slots. Normally, we'd say natgas, and natgas was indeed on our movers and shakers, so we'll probably head there as well. But we're going to kick things off this week actually out there right at the top of our product family list there in WTI, because I know, Brett, when you're not talking to me, you spend a lot of time crunching the numbers out there in all things crude oil, including an interesting post you just put up on the OptionsMetrics blog not too long ago called Implied Volatility and Geopolitical Events in Crude Oil. Coming in to start the show, WTI at an 81.61, up slightly on the week, about 1.1% on the week. So, Brett, what's been catching your eye out there in the world of crude oil these days?
Boredom. the crude is caught in a range about 2 weeks ago, and then it rallied back in. But it is essentially caught in a range, and you can see the implied volatility is coming in as a result. I mean, at the turn of the year, we were looking at like 33%-ish vols. Now we're looking at like the low 20s, which is a fairly low number for a commodity that can get into triple-digit volatility without any problem whatsoever. But keep in mind that this is also in the backdrop that crude oil cannot really advance in the face of, we have almost a dream geopolitical situation going on. We have almost 2, maybe even 3 potential wars going on in the Middle East. And with that, even with that, the market cannot rally. So, and it just sort of goes sideways. So the market is caught. And it used to be that and they're kind of ignoring the whole geopolitical thing. And it's much ado about nothing as far as I'm concerned. As far as, if I were trading, it's like, it doesn't have much potential either way until it finally breaks one way or the other.
You've been watching crude for a while. As you mentioned, vol, kind of anemic out there right now, 23, roughly 22 to 23, depending on where you're looking in the term structure. As you mentioned in the past, we've seen crude oil vol get much higher. Your article was entitled, implied volatility and geopolitical events. So there typically is a relationship between those two. Are you surprised that we're not seeing more vol, more action as a result of everything that's going on over there?
Well, yeah. I mean, but the issue is I think in the implied volatility and the geopolitics is that they're playing a sort of show me game, that we've had several geopolitical events, but they haven't really affected supply and demand. And until they do, it's all potential. Until they do, you won't really see a lot of action here. But keep in mind, there's a strange thing that goes on with crude, and it's exactly the opposite of natural gas. Each market, as you probably know, has sort of a scary side and the side that the market is comfortable with. In crude oil, blowouts tend to occur to the downside. So implied volatility tends to increase as prices go down. Case in point, when crude went negative, believe it or not, 3 years ago, we were looking at over 200% volatility. And when crude goes up, it tends to come off significantly. Natural gas, which you mentioned, is when natural gas tends to spike, volatility tends to come up when natural gas goes up, and the vice versa when it goes down. So they're both fairly implied are both fairly connected to price action, in the direction of price action, which is kind of interesting.
Was that only 3 years ago that it went negative? It seems like a lifetime ago.
April 20th, 2020. Never forget it.
So a little over 4 years ago. Wow, yeah, that's what a fun year 2020 was.
It was the exact beginning of COVID.
What were you doing in that moment? A lot of people came to me and said, hey, I saw those futures and they started hitting 25 cents. I said, I'll take a flyer on some. Why not? What's the lowest they could go? They found out they could go much lower than 25 cents. What were you up to in that negative environment?
Having been, trading a while or watching trading a while, at least these days, I thought when I saw the prints, I thought it was a bad print, honestly. I said, I didn't know it could go negative. I just figured, 0 was the lowest it could go. And I think a lot of people were in that situation. In a normal market, if I were in the trading room, I'd say, all right, get someone from the back office in here real fast to tell me whether this goddamn thing could go negative or not. But there was no one around. So I think the market was more or less free to do whatever it felt like. And it just, that was, in any market I've ever traded, that was the craziest day I've ever seen. And what was really interesting was that entire down move, most of that negative move, almost all of it, as a matter of fact, happened in the last 90 minutes of trading. It was pretty quiet the whole day. It was just more or less orderly coming down, and then it just went into hyperspace the last 90 minutes. Crazy market.
Good times. April of 2020. So many great things happening in the world right around that time there, Brett. Just
Interestingly enough, I live in Utah. We actually had an earthquake in April of 2020.
So just add that to the fun.
Yeah.
Good times. April of 2020, listeners. Not enough fun with the global pandemic. Let's throw a little negative crude oil into the mix as well. Crude oil obviously not negative today, 81.61, up about 88 cents just this week, or about 1.09%. If you go back to the end of our show last week, it's only up about 0.4%. As Brett said, kind of waiting for the next shoe to drop out there. It also seems to be the case on the volume front. Like we said, it's kind of quiet out there right now. People are starting to head for the hills already, it seems like, for the holiday next week. So there's about exactly 400,000 contracts on the tape right now, which is a little light. We usually expect WTI to be somewhere around 440, 450 this time of week. So slightly light out there. Of that, about 35.1% going up in the August contract that has exactly 20 days to go. So guess what? We're going to hang out there. The vol there, about 23 exactly. That's up about 1.6 points. So vol ticking up in the near portion of WTI this week, even if today all of our vol movers are, and pretty much for the week, most of them are pinning the needle on the CVOL front to the downside. In terms of skew, puts are where the action is right now, listeners. Last week, the puts 1.9% bid. This week, 5.4% bid. So ticking up a bit. The calls last week, about flat. This week, 1.4% cheap. So nobody really loves the calls, and folks are starting to pile into the puts. So intriguing stuff, kind of getting back to what Brett was saying earlier. We start to get a little lower. We start to see vol get a little bit juicier as a result, and this skew certainly reflecting that. In terms of what's leading the dance out there, though, this week, listeners, it was not actually in the August expiration. It's out in September. In particular, it was the September 90s, 9-0s, leading the dance this week with nearly 16,000 contracts on the tape. That's quite a clip in a pretty quiet week. By the way, the SEP contract, if you're wondering, actually a little bit lower, 80 and about 3/4 right now. And the vol out there, 24 even. So future a little lower, the vol a point higher out there. The 90s, though, 90s, that's nearly 10 handles out of the money, going up, again, nearly 16,000 times this week. The big day was actually Tuesday, 5,700. Looks like paper mostly closing there. Almost 5,000 again on Wednesday, so opening there. And then about 4,000 today against an OI of about 21,000. So quite a few open on the strike, and about 1,100 on Monday. Yeah, September 90s. Interesting, listeners. Did you have that? Did you have that on your bingo card this week? I know I didn't. That's why we have to run the numbers every week. Then going back to the August contract, we have the August 75 puts coming in number 2 this week, doing a whopping 9,222 contracts. The big day, actually Tuesday, 3,400 contracts, mostly closing there. 2,400 on Monday, opening 1,600 yesterday, 1,800 today against an OI of a little over 9,000. So 75 puts. Again, I said we're hanging out in that August contract at about an 81.61. So not that far out of the money put, leading the tape out there as well this week. But outside of that, really, as we said, kind of a quiet period, as Brett was saying, kind of a wait and see, kind of a whole lot of nothing, unless you're really excited by the 85 calls, also in August, going up 7,100 times this week. The big day is actually today, 2,700 against an OI of a little over 11,000, 2,300 yesterday, mostly opening, 1,500 on Tuesday, also opening, and a whopping 500 on Monday. So intriguing stuff, kind of all over the place paper out there, which reflects the fact that WTI seems to be drifting until maybe some of these geopolitical events actually start to show their teeth out there, in which case maybe we'll see a little bit more vol and a little bit more action on the WTI front. But we have to go from there, since we're hanging out in energy already, we have to go to one of our frequent offenders on the show, Brett. It is natgas. It is kind of hard to escape it. It is putting up so much paper, and it's also moving so much every week. This week, it's off 3.75%, coming in at number 4 to the dark side this week. Are you a big natgas watcher? And if so, what's catching your eye out there, Brett?
I mean, it rallied. My opinion, it rallied because of the, you couldn't open up a newspaper last week without hearing about, the heat dome and everything else. You would think we were living on Mars or something. So that was the good part of the rally. What always intrigues me about natural gas is they're always absolutely shocked that it gets cold in the winter and hot in the summer every year. It's like they don't live on planet Earth or something. But as I said, when natural gas goes up, you tend to see volatility coming up. But even so, I mean, you're looking at like 54, 55% volatility, something like that. I mean, it sounds high, but for natural gas, that's not particularly, natural gas is another one you think that has the potential to get into triple digits. It's higher than it was at the turn of the year. It's higher than it was at the same time last year. But again, my feeling is that this thing feels kind of heavy to me, and it's going to resume it. The only reason it rallied was because of all of this heat stuff that was in the popular media. And now it's going to go back to the swamp from which it came and sort of start coming off again. That's my feeling.
Yeah, you're right. We don't traditionally see nat gas rallying into the early summer months, so I was a little surprised, like a lot of people, that it had as much legs to the upside as it did. And seems like that's starting to come off now here, Brett, over the last couple of weeks. Let's get out there at 268 right now, and that front future listing is off 15% or about 5.5%. Just this week, of course, you go back to the end of our show last Thursday, it's off 3 3/4%. We've been kind of marveling of late at how much paper is going up out here in nat gas. I did say earlier, though, it does seem like a lot of people are starting to head for the hills for the holiday already, because that is also being reflected out here in nat gas. We've been putting up 1.2 million contracts some days out here in nat gas. Pretty much half of that right now, 600,000, pretty much exactly. Now, rewind about a year ago, that would have been a pretty explosive week. Usually you could expect 400, 450 in nat gas in a week. So 600 would have been a lot, but in this new volume regime we're seeing, 600,000 is actually kind of light. Of that, looks like the big dog this week, paper kind of spread out all over the place, which is interesting, because the big dog is only 8.5%. That's going up in the August contract. It has about 29 days to go. So we'll hang out there as well, listeners. What is the vol in the August nat gas? Nat gas usually pretty frothy, usually leading our vol list, or maybe battling it out there with perhaps yield vol or perhaps with the crypto space. Right now, coming in 53, pretty much even, off about 1.9 points on the week. So again, that's actually starting to get fairly low for nat gas. If you watch nat gas, it can get up into the 70s, 80s, triple digits fairly easily. So 53, roughly half of that upper level right now. So kind of interesting out there. In terms of skew, let's see. Puts last week, nobody wanted to touch them. They were flat. This week, 5.4% cheap. So no love for the puts this week. Maybe we are starting to find a little bit of equilibrium out here. And the calls last week, 2.4% bid. This week, 5.4% bid. So we have exactly opposite skews here. 5.4% discount to the puts and 5.4% bid to the calls out there in August. So perhaps we're starting to find our footing. Looks like the skew, at least right now, is showing a little bit of interest, concern to the upside. And in terms of action this week, I said we're hanging out at a 268. So probably not going to surprise you that the big dog was 36,000 of the 2.5 puts. Again, a near at the money strike. The big day actually today, 14,500 going up today against an OI of over 30,000. Tuesday, almost 13,000, 7,200 on Wednesday. And then Monday, 2,100, slightly closing on Monday, opening the rest of the week. And then if that's not doing it for you, how about the 3 1/4 calls? So there are still some people playing in the call wing. And given the fact that we keep getting bid up out there, maybe some folks are buying these 3/4 calls in August. Again, today, the busy day, 10,800 going up today against an OI of 26,000. We have about 10,500 going up on Tuesday, slightly opening there. Wednesday, 8,000 also opening, and then Monday closing. So Monday was the closing day for everything, and then everyone's opening the rest of the week. I don't know, Brett, 2.5 puts in August or the 3/4 calls. Which way are you leaning on those? So I'm guessing you're going more towards the puts if you had to buy one?
Yeah. What follow are you looking at there?
In August, it is a 53. So fairly low for nat gas.
Hard to say what to do with that. I mean, it's amazing when you can look at a commodity with 53, 54% volatility and it's on the low side, It's historically low. I mean, keep in mind that this is a commodity that was, easily that almost had a full-blown energy crisis in 22, complete with, over $9, with volatility in mid triple digits. So this is a pretty quiet market. So, long term, for me at least, despite what I just said, I guess I would be kind of hesitant to be short vol at these levels, because you are, by any measure, really towards the bottom of what volatility can do in natural gas. It really does. And as I said, it does tend to, if the market comes up for whatever reason, it does tend to spike. Currently 54.5%. It was trading 61.5%, 62% about 2 weeks ago. So 10 vol points. That's a pretty good move.
Some might say explosive, pun intended. Were you slinging nat gas back in the heady days of 2022, in the early days of Ukraine war, like you said, when we were threatening a 9 and a 10 handle out there, Brett?
I was looking. I had a client that was in Europe that had a problem with, European natural gas, which was a completely different animal than domestic natural gas, and it was incredibly explosive. I mean, it really was. It was, risk. A lot of risk management regimes work on worst case analysis. What's the worst thing that's ever happened to this commodity, and then we can determine the risk from that. Well, that was making daily new worst cases. So it's like, okay, how do we do the metric here? That we have no history. We're in uncharted territory. And that was, during the whole thing with Ukraine and Russia cutting off the gas and stuff like that. That's still having a semi effect on domestic natural gas because of the LNG tie-in. So we shall see.
Yeah, people who got into nat gas around that time, they have a very skewed perspective on, pun intended, on what nat gas can do. They expect, it can go roaring back to 9 at any time. I've seen it from a lot of our audience, or maybe newer to nat gas. They're not used to the fact that when it broke through 3 not that long ago, it was a huge deal. So, yeah.
I can tell you, and you'd probably agree with me, that people, when they start trading, like about the first year they trade, that kind of sets them for the rest of their career as to what was going on. Like when I first started trading, crude oil was coming off heavy they were having a price war. So to me, crude oil coming off is sort of a natural direction. Crude oil coming up, it seems unnatural to me, because that's where I made all my money. So
we set our patterns early in our trading career. Speaking of patterns, it's time to keep on rolling out with the show into our next segment. A little birdie told me, Brett, you're a bit of a metals guy, so we're going to head out into the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the shiny stuff we go. We got a lot of metals lighting up our movers and shakers this week, including platinum, number 4 to the light side, up 2.3%. You know the deal with platinum, not a lot of paper out there. And then, of course, a frequent offender of late, Uncle Mike's favorite, it is silver, off 5.5%, our number 1 dark side mover this week. So I kind of think we have to hang our hat out there. In terms of action, we're at about 29.23, off 70 cents, or about 2.3, almost 2.4%. Just this week. Of course, you go back to the end of our show last week, we're off nearly 5.5%. So silver losing and then gaining last week and then losing again this week. It's a very topsy-turvy product. Brett, I know you're a metals guy. How much are you watching silver of late? And are you surprised, like a lot of people are these days, at just kind of how much penetration silver seems to have in the masses? Of course, back in the meme stock days, a lot of people were talking about silver being one of the big squeeze that they were going to try to do out there, not really understanding the mechanics and the liquidity of how the silver market works. But it still seems like silver has a lot of penetration in the broad trading mindshare. Does that surprise you?
Not at all. And I think one of the credentials of being a commodities trader is that you've gotten your face ripped off in silver at least once.
It's the badge of honor, huh?
It's a badge of honor, because it's almost like platinum and nickel and, the industrial commodities. These are they're smallish commodities, and that there's a group, not a group, but there's small industrial metals that there's very historic players that play these things that have very good indications of what the flow is, where the corporate demand is, and, they make things out of these things, similar with copper and things. So they have a really good sense of the flow of the market, of when demand is coming in and when supply is coming in and things like that, that you just don't have as just a retail trader. You have you have no edge when you trade this. You really don't, unless you're involved in the market, in the depths of the market. So that's why, new traders in silver, if they're not familiar with it, or they just think, they're in there because of momentum or it's moving, so let's just trade it. You'll buy the high and sell the low. It's just a matter of when. So you will donate to that pit. It's just a matter of when. But currently, it was rallying. It's starting to come off again. We have volatility coming in. It's no longer expanding. It was up to almost over 40% about 3 weeks ago. And now it's coming back down into the low 28s, which to me, it almost says like, this party might be over as far as the action that's been going on. And I think also you have there seems to be a connection with, when gold is starting to get frothy, or meme stocks are getting frothy, or Bitcoin is getting frothy, there seems to be this you start getting silver, you start getting action in silver, as you said. It's like there's this 4 or 5 things that meme stock people tend to trade, and this is one of them. So caveat emptor on silver. I believe that thoroughly.
Speaking of meme stock froth spilling over into silver, I think we got some of that this week, listeners. In terms of action, silver seemingly kind of keeping pace this week, not really giving up a lot of volume like we saw in some of the other names heading into the holiday week next week. 63,000 contracts on the tape, almost 64,000. It's actually a little bit more than we might traditionally expect right now. So decent volume, all things considered. Looks like about 32%, so pretty much exactly about a third going up in the August contract that has 28 days to go. The vol coming off about 3/4 of a point this week. In terms of, actually, I'm taking it back. The vol is at about a 26, so a little bit coming in about 5.3 points. So a little bit lower out there on the silver vol front. And in terms of skew, it's a metal, precious metal, so it's going to be bid to the upside. The question is how much. And last week, the puts were 5.2% cheap. This week, about 6% cheap, so nobody still wants the puts. And the calls last week, 8% bid. This week, 8.5% bid, so not much evolution on the skew front. The calls are still pretty heavily bid. The puts are still pretty offered. If you go all the way out into later this year, you go out into November, you see about a 13% bid. If you go out into May of next year, the calls are about 16% bid. That seems about as rich as it gets here on the skew. But speaking of rich, and speaking of meme stock froth, Brett, spilling over into silver, I think we have some of that today, because our number one most active contract out here in silver this week, Brett, I had to double check this twice to make sure it was correct. We always know it's going to be some crazy upside in silver, and right now it's hanging out a little bit shy of 30 listeners, so maybe you expect 30, maybe 35 calls, maybe even 40 or 45 calls if you're really getting, optimistic. How about, Brett, the August 75s? How does that float your boat? Going up 5,100 times this week. August has 28 days to go, Brett, so that's a lot of time to get to 75. What do you think?
If it were power, I would say you got a shot, buddy. But it's not. And I'm not totally sure why somebody would do that, frankly, rather than take $10,000, cash it into $1 bills, and throw it out your car window. I don't see why you would do that, frankly.
Yeah, it's about the same impact, I would think, on the money in terms of your ability to keep it.
You'd have more fun, too, with the doing. This is the equivalent almost in WTI when we were talking about crude oil. When people start crowding into even strikes, like $100 strikes, that's a big number in crude oil. When you see people starting to do that, and you see sort of a retail focus on that, it's getting old, and that there's certain strikes that are indicative of, there's a lot of people in this market that probably shouldn't be involved in this market. But I don't know, what's the life of trading high in silver? I think might be in the 50s or $50 or something like that. I mean, the all-time high in silver, I'm not sure what it is. but I'm pretty sure 75 is higher than that.
75 in 28 days. You're saying a little bit of a bridge too far, perhaps, Brett?
Well, something's got to happen, and I'm not sure what, if silver's at $75, you got to think about, okay, what else is going on? That means gold is going to be who knows what. That means crude oil is going to be who knows. Something happened big almost to the point where it's not going to be your first worry in this world.
Yeah, I was thinking the same thing. We used to say that when I was out in the SPX pit and guys would sell like the 400 puts. They say, who cares? Because if we get down there, I'm going to have other problems than someone coming to me for these 400 puts. The 75 calls in silver, not that dissimilar. If silver is up at 75, they probably have other concerns. I'm looking here, listeners, this kind of paper, 5,100 contracts, you'd expect maybe it's a roll or probably it's some sort of funky vertical. This kind of stuff goes up all the time in the precious metals, but not seeing that. It looks like it's just 5,100 of the 75s. The big day was actually Monday, about 2,000 going up, all that opening. And then only every other strike in this month, there was nothing going up the rest of the day. So there was no real ratio vertical action to speak of. Tuesday, the 1,500 trading, again opening. 1,200 of the 31s did trade that day, so I suppose you could look at it as a 31.75 vertical, but is that really a vertical at that point? I mean, the 75 strike is kind of vestigial at that point, so it's not really a vertical. And it doesn't look like they went up together anyway. And then we have 800 going up yesterday, 700 today. Again, nothing else really appreciably trading today, so if they are doing some sort of weird ratio, they're legging it. So it looks like it is what it appears to be on the surface, and we also know if past is prologue, they're not selling these. They're probably buying these. So 75s, I'll have to go talk to our resident silver fan, Mr. Uncle Mike, see if that's him. But I'm guessing even for him, 75 by August expiration, listeners. That's a long way to go. 700, like I said, trading today against an OI of 3,500. So yeah, I don't know. I don't know what else we're going to find out here to top that. In the same month, listeners, we have the 12 3/4 puts. What is going on? Someone has maybe a really funky strangle that they're legging into. 12 3/4 puts also going up. Maybe a funky, really weird risk reversal. They went up 4,000 times this week. So they are the number 2. Also, again, out here in August. So again, we're at nearly a 30, listeners. 12 3/4 puts. 3,000 times on Monday, all opening. And then 500 times yesterday and today. OI 3,500 coming into today, so it stands to reason today is opening as well. So opening 4,000 times on the 12 3/4 puts and 5,100 times on the 75 calls in August, with the future around 29 1/4. Yeah, I did not have that on my bingo card this week. I guess that's why we crunched the numbers. I'll need to look, kind of running up against it here on the show. I'll need to dig into the block trades later if I can see some pricing, some futures that went up with this that make this make a little bit more sense, because on the surface, they certainly appear to be too, I think, to put it mildly, vestigial wings out here. But you know what, Mr. Brett, a little birdie also mentioned to me, you like yourself a little bit of the base metals. You like to get a little bit of base. So I think listeners will head on out of silver and we'll tick down one notch in the product family to the base metals. And then from there, we'll get into all things copper. Brett, one of the interesting stories for me, we've been doing this show for a while, and early on in the show, copper was not really much of a options story at all. Didn't really do a lot of paper, kind of a bit of an also-ran. This week, a quiet pre-holiday week, 63,000 contracts on the tape for copper as well, so doing as much paper as silver, which is also kind of fascinating. Are you surprised at the evolution of copper in terms of volume? And then also, what's been catching your eye out there in copper these days?
The evolution of copper. I mean, the copper of all commodities suddenly became like, a retail darling. This is an industrial commodity. It's a niche commodity. It's like your dentist telling you that, he's playing palladium or something like that. The bloom is definitely off the rose, because when you read about it, there's been a whole bunch of articles out there lately that, it might not be as supply constrained as everybody thought and everything else. So that if you're thinking about buying this because, copper is going to be the center of, the energy transition and stuff like that, you're probably going to have a rocky road. I've only started seeing those articles like in the last week or so. Before then, it was all supply constraints and everything else. And I think that's why, you're seeing the market coming off. You're also, what I've been noticing though with copper is like about mid-May, the options were trading in the mid 30s, 35%, stuff like that, plus or minus a couple percentage points. Now we're down to 22%, 23%. And that's a pretty serious vol drop in 2 weeks, which says to me that, again, the bloom is coming off the rose. I think a lot of people are exiting and saying, this trade was yesterday and it's no longer such a great trade in options land. It's probably gone, in my opinion, the volatility is probably a little too low for where we are now. But, I think this is it's sort of like trade. This is the prom at 3 a.m., I think, so.
Everybody's gone. Everybody's moving out of the copper trade. You mentioned the energy, the EVs and everything being a big driver for copper. The other big driver we hear all the time, copper in many ways has become kind of a bit of a byword for China, the Chinese economy, Chinese demand. Whither goes China, so goes copper. I'm curious, you've been watching copper for a long time. Do you think that narrative is kind of overplayed, or is copper really the bellwether for what's going on in China?
My honest opinion, I don't know. My gut sense, having been involved in markets for a long time, currently is that when people don't know what's going on in the fundamentals of various commodities, they lean on China. They either go to the China story or they start dragging out that the dollar is high or low, when in reality, we don't really know. What I do know is that the commodity indices have absolutely no jump to them. And until China, and that's kind of indicative that, global demand might not be that encouraging, and that the Chinese recovery might not be that encouraging as well. Until I'm not seeing any big jump in in certain commodities or just in the indices in general to indicate that would be the case. So
let's see.
I'm not sure China got much to do. As I said, I'm not sure that people trot out China when they don't know what's going on lately.
It is just throw it in there. It's China. Why not? China's driving all these things. What's driving crypto? It's China. Why not? What's driving WTO? Yeah. Sure, it's China. Why not?
No, I feel sorry for people who have to write about markets every single day because, fundamentally it's like, I said China yesterday. Is it China today? What's different? They have to say something, so they drag out the China thing. I heard that was a big deal in crude oil and, in energy for a long time it's being held up because China demand or Chinese lack of demand, and that's still trotted out every now and then. But again, one of the biggest things I've been seeing in the last 2 or 3 months in commodities is just that the indexes, BComp, the Bloomberg Commodity Index, the Goldman Sachs Commodity Index, these things they do not rally, or they rally very briefly and then they start going sideways, or they start moving down again. They have no bounce to them. And you can see it in some of the Goldman Sachs Commodity Index, there's a couple of ETFs attached to that with options attached. These things were trading 21% vol, something like that. They were trading 38% vol about 2 years ago. And the vol has more or less been going sideways for a long time, as has the index. There's just no jump in these things. And that's reflected, most of those indices are composed of energy and industrial metals and certain grains. But no matter where you turn in the commodity sector, nothing other than some minor stuff like, OJ and lumber and things like that look really they're really ready to rock. So everything else looks just kind of sideways and boring.
Let's see if copper is ready to rock. Volume-wise, it certainly is, keeping pace with silver this week, listeners. Of that 63, almost 64,000 contracts, 22.5% going up in the August contract. Has about 28 days to go, so we're going to hang out there. AUG silver 434 right now, listeners. Vol wise at about an 1843, off about 3.69 points on the week. So obviously more volatile than gold, but less than what we were just talking about out there with silver. In terms of skew, again, they like to bid the upside, and seems like in most of the metals, not just the precious stuff. The puts last week 3.7% cheap. This week 5.6% cheap, and the calls 5.9% bid last week, 5.7% bid this week. So coming in slightly. The big dog this week are the 5 calls in August, going up 8,600 times. Most of that on Tuesday, 6,300 on Tuesday, 2,100 today. Again, total of 8,600. OI coming into today, 5,800. So probably opening there again. That 5 call seems pretty outlandish, optimistic, call it what you will, Brett. But we were just talking about some funky strangle, risk reversal, call it what you will paper in silver. I think our friend is also coming to play in copper as well, Brett, because the number 2 most active, it's actually a tie for 2. And we have a tie, Brett, between the August 14 calls, yes, 1-4, and the quarter, yes, 1/4 of $1 puts, also in August, going up 5,300 times exactly each. So it's clearly related paper. Both of them went up 4,000 times opening on Monday, and then 700 times on Wednesday, also opening 600 times today. So both of them pretty much opening 5,300 contracts. Also, it's the exact same expiration cycle as well as we saw in silver in August, 28 days. So if it looks like a duck and it quacks like a duck, listeners, I have a hard time believing this is not related paper. I don't know, Brett, maybe we've stumbled upon a very funky strangle trader here in copper and silver. I don't know what's going on with these.
I was going to say that, with vol down here, vol's come off since, it made new life of trading highs at 511 or whatever it was in copper, all-time highs. And then it came off. So volatility started coming off. I was going to say that, if you buy volatility, you're basically betting that they're going to make another run at the life of all-time highs of 511, which is actually, I think, a pretty decent idea. But I was going to say, if it breaks through the all-time life of trading highs, I'm not really expecting 14. I'm not really expecting 511 up to 14. I can't think of a fundamental. What fundamental would lead to that?
I mean, we have talked recently on some of our other shows, the vol shows, about people, speculating and trading and quote unquote junk calls and things like VIX 65 strike and stuff, picking them up for a couple of cents because they can actually double or triple in value with a very small move in VIX. Maybe there's something analogous going on here. I mean, I'm not that well versed in the junk call performance in copper. I'll have to go beef up Brett to see how they perform, if they hold their value, if they could pop with a relatively modest move the way VIX calls do. The quarter puts, I don't see any utility to those at all. That's just a complete catastrophe hedge, it seems like there. So yeah, this one, wow, you picked a good week to come on, Brett. Not often paper puts me at a loss for words, but I'm hard pressed to see much utility in this at all, even against futures. What is the utility of this?
People have a lot of people have irrational risk preference, as we call it, and they like to buy lottery tickets. And they say, it's cheap. Why not? So maybe that's the idea. But I think you can roll down a couple strikes from 14 and still have basically the same trade.
Yeah, I think the meme stock players are starting to invade the metals. I mean, we just saw in silver. I mean, we joke about it all the time on our network. We've seen things like pre-split in NVIDIA when it was trading around 1,300. People buying 1,700 calls expiring that week or the next day. I mean, absurd things. And these happen routinely. Apparently, that's now making its way into the metals, Brett. Everything old is new again.
But that's you never can tell. I mean, that's going to be the answer. They'll say you never can tell. But the problem is the rejoinder to that is you can tell. That's the whole basis of options trading. That you don't play scratch and sniff lotteries every week because you're not going to win, most likely. I mean, this is a probability game. And if all you're going to do is keep on betting like that, you're most likely just going to give away all your money. I don't know why you would I mean, you're looking for bragging rights? What? Because to buy like the 14 call in copper, like why buy the 14? You might as well buy like the 8 or something. They're probably not all that different in price, you know?
That's the other thing. These people are ignorant. I mean, they'll buy for the same price things that are dozens or hundreds of handles higher in strike than that they could buy the equivalent strike for the same price much lower, and they ignore those. So there's some reason behind it, but it defies me and defies logic, I think, Brett. You probably can get the 10s, you're right, for pretty much the same price if you really wanted to.
Yeah, I don't get it. But, you know, people, you know, the market's open every day. Anyone can do whatever they want.
I'm going to even dig into these a little bit more after the show. But unfortunately, Brett, time flies when you're talking whack job strangles in the metals. But apparently that's what we got on the tape this week. So that music means we're coming up against it. But before we go, I mean, we spent a lot of time in the energy and the metals. Really quickly, if there's any other complexes or products out there that are lighting up your tape, you want to kind of share some insight with our audience, now is the time, sir. The floor is yours.
As I said, the only thing, the thing that's really striking me is just the complete lack of buoyancy in the commodity indices. I'm just not seeing a buoyant market in either the GSCI or BCOM or any of the other indexes, and those are pretty energy dominated, as well as with metals and grains. So, you know, people can talk about geopolitics, or you know, the energy transition is going to start moving commodities up, and the long-term forecasts are pretty bullish. But in the meantime, back at the ranch, we're not seeing it. And volatility is coming in on most of them. Whether that's because we're moving into the summer months and it's kind of quiet, or there just really isn't the type of industrial demand out there that everyone is banking on. And inflation really isn't a concern if it's tied to commodity land. That's what I'm saying. That's kind of strange. So.
All right, and Brett, if folks want to learn more or follow some more of your analysis in these various markets, where should they go? What should they do?
They should either go to the OptionsMetrics site, www.optionmetrics.com. They can read me at OptionsStrat, www.optionsstrat.com, or they can go to my firm's website, www.winhallriskanalytics.com.
There you go. Check him out, listeners. And, of course, you know where to go to check out all of the reports we have cooking here on the show and much more. Begin your journey, cmegroup.com/TWIFO, TWIFO. That'll get you to all the reports. You, too, can look at these crazy strangles in the meme stocks or whatever they are, risk reversals, try to figure out for yourself what the heck they are up to out there. cmegroup.com/TWIFO, the place to go. While you're there, of course, you can mess around with the CVOL dashboard and all sorts of other things. FedWatch, a lot of great tools lurking for you over there. That's going to do it for us on the network today. Back again tomorrow, actually coming in early for the pro folks, 11 a.m. Central. Going to do oddities earlier than usual because I do have a plane to catch later in the day. And then after that, of course, we're back noon Central, 1 p.m. Eastern to talk all things volatility on Volatility Views. Who's going to join us on the show tomorrow? You got to tune in to find out. Then we're back again on Monday, kicking things off with the option block. And then, of course, holiday next week, so we're off next Thursday. So back again in 2 weeks, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.